Hi, I'm Bob Grisanti, your cameraman. You're watching Taking Stocks.
2 minutes to go here into the closing bell on the trading floor of the one, the only, truly iconic New York Stock Exchange. Speaking of icon, look who joins me now to kick off the broadcast on this Friday. Peter Tuchman. Stocks up today, down for the week. Every of the major market indexes down for the week except the New York Stock Exchange Composite Index, interestingly. Everything else red. Okay. What did you see today?
Well, what I saw today was an exact mirror image of yesterday. If you'll remember yesterday, we spoke right on the close. Okay, what we did after I left you yesterday is we were trending down all day long. We were down 120 handles when I walked away from you, right? All over the Google story, right? It was CapEx versus monetization. In the last 4 minutes, we rallied 40 handles. When we close at the lows, we usually capitulate and gap down. Yesterday, we rallied in a massive short cover, people picking the bottom, and we only closed down 88 handles. Today, we did the exact opposite, though. We ended up getting 2.7 billion to buy. Yesterday, we had 2.7 billion to sell, and you'll notice that the market may actually close on the downside as opposed to the upside. So it's kind of, look, there's so much rotation going on, so much movement in this market, really good volume. Today was an impressive day. It was really constructive, money being put to work. The buyers were taking advantage of yesterday's selling.
We got 4 Mag 7 stocks reporting earnings next week. Yep. We got the Fed decision on Wednesday. I hope you'll come back and see us after the weekend.
I look forward to it.
Nixon 5, taking care. Enjoy your weekend. Time now for the closing bell. All right, there you have it. Stocks up on the day, but down for the week. They're not up very high on the day. Final tail of the tape for this Friday, July 24th. The S&P up 0.05%. The Dow up, let's call it 0.5%. The New York Stock Exchange Composite Index in positive territory, 0.5%. The small caps down 0.4. Oil finally retreating just a bit. 10 of the 11 sectors of the S&P 500 in positive territory on this Friday. Real estate, materials, consumer staples, the best of the bunch. Ironically, tech, XLK, the only sector that was in the red today. Over in the Dow, Salesforce, IBM, Apple, your best performers, your Dow laggards on this Friday. American Express, more on their earnings call in just a bit. NVIDIA and Goldman Sachs. A bounce back for a few of these Mag 7 names, which were all in the red in yesterday's session. Apple up 3% into the close. Shares of Tesla down 2.5%. Let's bring in the one and only Jessica Inskip, Director of Investor Research at stockbrokers.com. Come on in, my friend. Thank you for being here.
Hi, JD. Happy to be here.
So, okay, we've had earnings now for a couple weeks. Earnings palooza. After the big bangs, we got some mega caps. Is the market reacting more to earnings or more to what's going on in the macro environment?
Wonderful question. The market is actually reacting more to liquidity than it is earnings. It's the liquidity constraints because the earnings are wonderful. We're looking at double-digit growth for the third consecutive quarter. We have had wonderful beats. The banks have been doing fantastic, even the hyperscalers, but we don't like the CapEx spend. And it's really the environment, because it would be different if we had higher CapEx spend and a less restrictive Fed, or less worry about what's happening with oil and the Strait of Hormuz, less worry of raising interest rates. That's what's bleeding over. So it's really difficult for stocks to go higher if we don't have a better macro environment. That's driving right now.
I would love your take on the response the markets gave Alphabet after that first ever report of negative free cash flow. It gapped down in yesterday's session 7%. Someone found its footing a little bit better on today. Was that an overreaction, you think, given all of the other information we learned from Alphabet, but there was clearly one bad sticking point investors not so fond of?
It was a bad sticky point, but I think it was absolutely an overreaction and an opportunity to buy. Incredible margins, but they also have an incredible backlog. So if we're increasing the CapEx spend to meet capacity, to meet those demands, it's not a supply constraint. there is such sensational demand, so I think it's very, very good. But again, it's the environment. The 2-year note was reaching, and once again, a new 52-week high. Once that 2-year note starts increasing, then the cost of capex is going up, and that's bleeding into these fantastic earnings. Is the cost of capital.
What does it tell you on a leak like this one, Jessa and Skip? Energy, utilities, industrials, those are your leaders. It was not necessarily something like, let's say, consumer staples,
right,
when you talk about rotation.
Exactly. So it's still telling me that it's a healthy market because we're seeing that broadening. I want to see that broadening and continue. But if I'm seeing industrials, I'm seeing utilities, I'm even seeing information technology is not the lowest sector on there, so it's not a flight to safety, but it's still the artificial intelligence trade. It's just broadening, and it's not so concentrated in the hyperscalers due to the capex spend. It's the picks and shovels. The picks and shovels is the trade of today. But once we remove that risk of the Strait of Hormuz, we go into next week, we look at Kevin Warsh, those are our catalysts that could push us higher, and then have those hyperscalers start to participate.
Yeah, let's do a little bit of a preview for what to expect next week. Obviously, 2-day FOMC policy meeting Tuesday, decision Wednesday, Warsh's second press conference Wednesday at 2:30. You also got a lot of big, juicy Mag 7 names that are reporting right around that time.
We do.
How do you prepare for such a big week like that? And what more would you want our viewers to keep in mind as we head into such a consequential few days?
Yeah, first and foremost, you need a good night's sleep because we have to pay attention.
Not kidding.
But I think Warsh is in actually a very interesting scenario. He's in a conundrum, if you will. He has to either A, listen to the bond market. So the 30-year has been increasing, the 10 years increasing, the 2 years increasing. Every single one of them are increasing. The 2-year has higher velocity than the rest. He could tame the bond market by raising interest rates and listening to the bond market. I don't think he's going to do that. Then on the other hand, we have this short-term inflation shock. His framework is to look through short-term inflation shocks and look at the underlying causes of inflation. So if he raises interest rates due to that, that would break his entire framework, and credibility is extremely important, as we know when we're talking about the Fed. So I think we're going to be at a hold, but what's more important to me is the language, and he doesn't give us much. If he tells us that this oil shock is a continuation, then that will tell me it's perhaps not this one-time shock that we can look through. But if he still makes it one-time, transitory, we know we don't like that word, but that will give us an insight of how we could utilize, or how we would utilize interest rate policy going forward.
Before I let you go, we do have a little bit of late-breaking news, and I want your response to it in real time, if you don't mind. Sources familiar with the situation tell me today is Jessica and Skip's birthday.
It is my birthday.
Can you confirm?
I can confirm.
Happy birthday, pal.
Thank you.
For
I
taking
appreciate
time
it.
on your special day to join us here on the broadcast. All the best for an amazing birthday. Enjoy your weekend.
Absolutely, my pleasure. Wouldn't happen any other way.
And I hope we'll see you next week during earnings. The Fed, we got a lot to talk to. Thank you for kicking us off.
Sounds good. Watch that 2-year.
Robbie, watch that 2-year, folks. Robbie will grab your mic. Here are a few analyst calls here today. We don't frequently get analyst calls on a Friday, but like Justin and I were just talking about, we are in the heart of mega cap earnings. So Baird, first up, reiterating Apple with an outperform rating, boosting the price target from $310 to $330 on potential for further upside. Apple reports on Thursday. HSBC starting coverage on SpaceX as a whole. They say space, connectivity, artificial intelligence, they are all designed to leverage a cost-efficient model. SpaceX shares down again today. Finally, Deutsche Bank reiterating, this way, got it. Meta as a buy, saying it's bullish ahead of Meta's earnings call on Wednesday. They did lower the price target, however, 810 to 800, shares underwater 8% since the start of 2026. But Abhi, let's take a look here at shares of American Express, down 4.3% today, gapping down after reporting results, trading back down underneath the 50-day moving average. Revenue grew 10% year over year. Yeah, that sounds great, but believe it or not, it still missed Wall Street's estimates for the company's top line. It did, however, beat on profit, and that's good. Shares down today, shares down 13% year to date. As we continue to celebrate America 250, few brands can say that they have been here truly since the beginning. This week on the J.D. Durkin Show, I sat down with the 10th generation family member of Laird's. That is America's oldest distillery, to talk about keeping a 250-year-old business alive today. Take a look.
Well, it means a lot. Like I said, our history has been intertwined with America's history. So we take great pride that we have been able to survive and endure right alongside the country, whether it be through the world wars or prohibition, all up until recently COVID. We have just kind of stayed steady and determined like our country has. And to celebrate that, we wanted to have a special release that really marked the pinnacle of the celebration. So we released a never before 13-year-old apple brandy, which is the oldest age statement that we've ever released. And this is what I have here right in front of me, bottled at 56% ABV in celebration of the 56 original signers of the Declaration of Independence.
Holy cow.
It's a 13-year-old apple brandy for the 13 original colonies. And we only bottled 1,300 bottles, so about 100 bottles per original colony. So they're in very limited demand, and once it's released and bottled, we'll never do anything like this again. So
how long did it take you all to plan to do this around America's 250? This isn't something you just decide in like the month of March, be like, we're going to do this for like the biggest anniversary the country's seen.
We probably started thinking about it at least 2 years ahead of time.
Yeah.
But about a year was really when the wheels and cogs started to go in motion. Not everything went according to plan, but we got it out just in time, and the feedback has been incredible from all of our fans and the press.
And you're not just selling a drink. The way I think about you and your mom and your family, you're really stewarding a unique piece of American history. And it's one of the many things I love about Laird so much. How do you balance preserving that legacy and at the same time running a very modern business?
Mm-hmm. That's a great question, and a very hard thing to do. That was one of my biggest challenges coming into the business, but it's a challenge that every generation before me has also had to deal with. My mom had to deal with the shift in consumer preferences away from brown goods. So she had to endure that storm, and she did that by making new products in our portfolio, updating some of the labels and packaging. But in terms of what now I'm tasked with and following up with my mom, we're both working hand in hand. But like you said, keeping that modern edge while still remaining true to ourselves. And that's the most important thing about us, is the history we have and the heritage. It's something that brands wish they could make up, wish they could purchase. And we'll always have that. And we always strive to stay true to ourselves. We try not to chase trends too much. We try to stay true to ourselves and think decades from now on what can set us up for the future generations, instead of making a quick buck in a year or two.
Is there a way that a brand as old as yours, almost 250 years old yourself, are you using artificial intelligence? Dude, I would not be doing my job if I didn't ask some AI question.
That is a good question. We're implementing it here and there. I mean, we're a very small team. We have about 35, 40 employees right now. So AI does give us capabilities of creating efficiencies and just giving us an edge on like synthesizing data and finding where we have opportunities in different markets. So we're trying to use it where we can, but at the same time, we have a lot of processes in place, especially on the distilling side, where like if it's not broken, we don't fix it.
Welcome back to the show. You are watching this Friday afternoon edition of Taking Stock live from the New York Stock Exchange. Our next guest joins us now. Kelly, it's really nice to see you here. Kelly Littlepage, founder and CEO of One Kronos. Grateful for your time.
Thanks for having me on.
Let's talk about applying Wall Street financial markets to the world of AI infrastructure. First and foremost, what is One Kronos actively building?
So One Kronos right now is a U.S. equities trading venue. So we match stocks via something called the combinatorial auction, which is new to capital markets, but it's not a new concept. And we are doing this for compute because compute is not the new oil. It's an entirely new thing. It's going to be a bigger market, but it requires its own market structure.
So help me better understand this, because there is a gap in the world of GPUs today. You can rent them, but there are limitations. So what does that actively mean, and what is missing in today's market?
Price discovery is a big problem, and that really starts upstream with how do you finance and how do you get predictability off of the cash flows that are going to be coming off of GPUs. And that's the part that One Kronos is very focused on.
So we have commodities futures, certainly something that I'm familiar with, our viewers are familiar with. They may have even dabbled in these as investment products before. What is the case for compute futures, and what would that actually look like?
That's the really tricky part. Since the barrel of oil had the same energy content and the same use cases in the 1980s as it does now, compute is not a standardization target in that way. You need something more dynamic. You actually need something that looks more like the MBS market, mortgage-backed securities, if anything.
What do you, so talk to me, let's drill down on that, no pun intended, on what do you see actively in the world of MBS that you think could also be applicable to this conversation?
So what I see there is heterogeneity, where home loans, they're not identical. You can create an investable pool of assets that is something you can financialize, but it's pretty hopeless trying to box them into the same mold. And compute is in the same situation. It's not a barrel of oil, it's something else.
And ultimately, why do you feel that One Kronos is uniquely well positioned to tackle the world of compute markets and everything else you're considering?
This is our core expertise, and our background is academic mechanism design and financial markets. So the folks on our team have worked on some of the biggest new auctions and new markets like FCC wireless spectrum, which was another complex problem back in the 90s. Compute's a complex problem now, and we're very focused on delivering the right solution to it.
And I'm sure you're also focused on a lot of exciting things, Kelly, that you can't quite yet tell us. Can you give us some sense under the hood what comes next for you and your colleagues on the team?
Yeah, absolutely. So we have some very cool stuff coming down the pipeline as far as how we actually bring these markets to bear and help accelerate the AI build out, which is really what we're focused on. Big picture is just how do you get as much AI compute available so that we can all see the benefits of this in society.
Kelly Littlepage, founder, CEO of One Kronos. Really grateful for your time. Thanks for stopping by the show today.
Thanks for having me on.
Enjoy your weekend. Don't go away. We got a lot more taking stock coming up on this jam-packed edition on the show for Friday. Stay tuned. Stand by, I'll be right with you. Welcome back to the show. It is my honor to now say the great Chris Gardner joins us now, Wall Street veteran, best-selling author of The Pursuit of Happiness, the one and only. Chris, it's really nice to see you here today. Thank you for coming by.
Hey man, thank you for having me. It's an honor to be here.
So for people who are seeing this, they're familiar with you, they may know your story. What actually brings you down here to the NYSE community today?
First of all, I love the business. I've been in the business for over 40 years, but I have a group of young people today joining me from Milan, Italy. Their first trip to America, first trip to New York, and you cannot come to New York City without a visit to the New York Stock Exchange. So that's why we're here.
A trip to the big board does make the New York City experience complete, for sure. Your story has inspired millions of people. What are some of the biggest lessons you think in terms of resilience and overall resiliency that you want people to carry on?
The biggest lesson shared is that if I can do this, you can do that. That's been the universal message that I've gotten from people around the world. You made me believe that I could do this.
Talk to us a bit more about your journey, specifically here on Wall Street, some of those things that kept you moving when you felt insurmountably the odds were stacked against you.
The one thing that kept me moving from the very beginning was my commitment to Plan A. And Plan A was, I was going to become world class at whatever I did with my life. Not good at it, not pretty good at it, but world class at it, and everybody on this floor feels the same way. That's why they're here.
It is almost 20 years, believe it or not, since the film Pursuit of Happiness was released. Not many people could say Will Smith played them in the film, by the way. I mean, that's incredible. What is it like watching your life, not only on the big screen back then, but the way it's resonated nearly 2 decades later?
Man, Bob Seger put it best, 20 years, where'd they go? 20 years, I don't know. But the important thing is what's getting ready to happen next. That's the question you need to be asking.
Well, that's my next question, sir. Sir, let's go right there.
JD,
What happens next?
JD, stay tuned. We'll be right back.
If you could go back in time and give your younger self one piece of advice, something you wish you had been told when you were a younger man, what would that be?
I know this. What I would say to that younger guy, I told you so. I told you so.
You spent, of course, as we said, many years here on Wall Street. What are some of the most important money lessons that you wish more people learned early in life?
First of all, invest your time before you invest your money. That was the first thing I learned from Ace Greenberg. Number 2, get smart quick. I learned that from another powerhouse, Sandy Weil. But most importantly, I learned from Jamie Dimon. Relationships are the most important asset. Relationships can do things that money cannot. That's why I'm standing here today.
Oh, wow, I love that. While I still have you, what is one habit that to this day you never skip?
Pray.
Prayer.
I never skip a day of praying, and I pray often, all day, every day. I pray more than you guys trade.
Well, thank you for those prayers, of course, without a doubt. I have a sense I might know what this answer is. What is one book every young professional should read?
Oh man, I got to tell you, I just finished a fabulous book, Theo of Golden.
Okay.
A fabulous read, and that's all I can say. Theo of Golden, you'll thank me later.
What does the word happiness mean to you today?
We spell happiness with a Y in the book and the film for a reason. That Y is there to make sure that we all know it's you and your responsibility, you and your opportunity to create the life that you want for you and your family. That's why we spell happiness with a Y.
I've been really grateful for your time. It's really an honor to meet you. It's an honor to have you on the show. Where can people go if they want to find more about the work you continue to do and the things you continue to write, Chris?
I'm not hard to find, baby.
Chris Gardner, Wall Street veteran, best-selling author of, among other things, The Pursuit of Happiness. It's really great to have you on the show today.
Jay.
Thanks for taking the time.
Thank you.
Take good care.
Thank you.
And stick around. We got a lot more Taking Stock on this Friday coming up from the New York Stock Exchange. Chris, take good care.
We'll see you again.
Welcome back to the show. Time now for a few headlines in the world of fintech, cryptocurrencies, and artificial intelligence you need for your Friday as you head into your weekend. At this hour, the crypto majors under a bit of pressure. Bitcoin trading right around 64,140 and change. Next up, a new study from Google finding artificial intelligence is helping workers get more done, not actually replace them, with adoption expanding across both white-collar jobs as well as skilled trades. And finally, NVIDIA CEO Jensen Huang officially joining X, that's of course the artist formerly known as Twitter, to urge Washington not to restrict open AI models. He's warning overregulation could stifle innovation and undermine America's leadership in artificial intelligence. Scarlett Sieber is now back with a whole new edition of Hindsight 2020. That's of course where she breaks down key dates in financial history. Take a look.
I'm Scarlett Sieber with Money 2020, and this is Hindsight 2020. Let's rewind back to July 2002. Sarbanes-Oxley is signed into law. It comes after a series of corporate failures, Enron, WorldCom, where financial statements didn't just mislead, they fundamentally broke trust. Sarbanes-Oxley doesn't focus on growth. It focuses on accountability. It introduces stricter internal controls, executive certification of financials, and real consequences for misinterpretation. In hindsight, it does something much deeper, though. It formalizes the idea that trust can't be assumed. It has to be engineered. Controls become systems. Compliance becomes infrastructure. And once those systems are in place, they don't go away. Let's fast forward to today, and every discussion about auditability, traceability, and governance builds on that same logic. When trust breaks, regulation hardens. Sarbanes-Oxley wasn't just a response to failure. It redefined what it means to be credible in public markets. That is your Hindsight 2020, because once trust is lost, rebuilding it is always more expensive than maintaining it. With that, let's go back over to you.
Doing market check, stand by. All right, welcome back to the show. With our remaining few moments of this Friday's broadcast, we'll get you quickly caught up on what to expect next week of Wall Street and nicely wrap you up in a moment or so for all the big stuff that happened today. We'll start there. Stocks up for today, but ultimately proved to be a negative week for the major market indexes. 10 of the 11 sectors in the S&P 500 were up for today's trade. Real estate, materials, consumer staples doing the heavy lifting. A fair bit of rotation out of tech. Ironically, tech stocks, the only sector in the S&P that was down. Salesforce, IBM, Apple, your Dow outperformers. Your laggards include American Express, NVIDIA, and Goldman Sachs. Intel, interesting day, reversing intraday after reporting quarterly results earlier on this morning. It started after the opening auction green. It did not last long, going into the closing bell, down as much as 7%. That helped to pull down other comparable chip names along with it in sympathy. So we saw red on the big board for names like Broadcom, AMD, as well as Micron. The airlines caught a bid today. Oil and energy stocks caught a bid today. Not a lot of whole other sectors did, however. Memory and quantum in particular under severe pressure. Gold and silver both moving up at least a little bit. And as we talked about in the last block, crypto majors in negative territory. All right, next week here on Wall Street, mega cap earnings roll on Wednesday of next week. We'll get the latest quarterly results from a few Mag 7 names. That includes Microsoft and Meta. Then on Thursday, we get some of the A's reporting, Apple as well as Amazon. Plus, we'll get the latest quarterly results throughout the week from memory giant Seagate. Consumer staples are defensive favorite, Coca-Cola. Some oil and energy names set to report 1 week from today, next Friday. On Wednesday, oh yeah, as if all of that weren't enough, it's also Fed Day. We'll hear from Kevin Warsh at 2:30, a half hour after we get the committee's decision on short-term interest rates. And next Thursday, a PCE inflation print. Thank you for watching today's edition of Taking Stock. Have a terrific weekend. Thank you for watching the show, one and all. We'll see you again Monday live from the trading floor of the New York Stock Exchange.